The United States has a credit rating system that is used to measure the financial health of an individual or business. This system, known as the FICO score, was developed by Fair Isaac Corporation and is used in a wide range of industries, including mortgage lending, insurance, banking, and finance. The score is determined by using a variety of factors, including payment history, length of credit history, types of credit, and balances owed. Welcome to Wise Thinking channel. Please don't forget to like, subscribe, share, and tell us what you think in a comment section below. Thank you and enjoy. There are many reasons why people want to improve their credit score. Some want to qualify for a loan, while others want to avoid having their identity stolen. Whatever the reason, it is important to understand how to build your credit score. First of all, you need to know what factors are used to determine your score. A FICO score is calculated based on information about your past credit behavior, including the length of credit history, amount of credit available, types of credit used, new credit accounts opened, types of credit accounts closed, types of credit accounts open, credit inquiries made, delinquency on accounts, debt ratio, a payment history, balances owed. As you can see, there are a lot of factors involved in determining your credit score. It is important to remember that the FICO score is only one factor in a number of different factors that affect your credit. For example, the amount of money you owe will have a direct impact on your credit score. However, the type of account you hold will also play a role in determining your score. If you have a credit card with a high limit, you are more likely to use the card and pay off the balance than someone who holds a lower limit card. Another factor that plays a role in your score is how long you have been using credit. In general, the longer you have been using credit, the better your credit score will be. On the other hand, if you only have a short credit history, you will have a harder time building your score. The next thing you need to know about how to build your credit score is that you need to pay your bills on time. If you have been paying your bills late, this will negatively affect your score. Paying your bills on time is important because it helps establish a good payment record. One of the most important things to keep in mind when trying to build your credit score is to not apply for too much credit at once. This can be especially difficult if you are just starting out. You should try to get a credit card first and then build from there. Also, don't forget to check your credit report regularly. You can request a copy of your credit report from each of the 3 major credit reporting bureaus once per year. In order to increase your score, you need to make sure that you are using the right credit cards. Try to choose a card that has a low interest rate and a low annual fee. These 2 features will help you build your score. If you have been using credit cards and have had some negative experiences, you may want to consider getting a secured credit card. These cards require that you deposit money into a bank account before they will approve the card. This is a great way to start building your score. Does paying off a loan help or hurt credit? Paying off a loan frequently hurts credit because it impacts your credit history and your credit mix. If the loan that you have paid off is your oldest credit line, then the average age of your credit will become newer and your score will drop. If the loan that you pay off is your only loan, then your credit mix suffers. Will paying the minimum on my cards improve my credit score? No, this is a widespread myth. You need to pay at least the minimum payment due on your credit card every month so that your cards have an on-time payment history. You do not have to pay a single cent in interest to improve your credit score. In fact, paying your credit card balances in full every month will have the greatest positive impact on your score because it will improve your credit utilization percentage. How long does improving your credit score take? There is no set minimum, maximum, or average number of points by which your credit score improves every month, and there is no set number of points that each action will gain. How long it takes to improve your credit depends on the specifics for why your credit score is low. If the major negatives on your credit score are credit utilization, and then you pay off your balances, your score can improve drastically in a single month. If your credit is low because of multiple collections and poor payment history, then it will take several months of on-time payments to see any positive movement in your score. Does getting a new credit card hurt your credit? Getting a new credit card can hurt or help your credit, depending on your situation. It can help to increase your credit mix and improve your credit utilization percentage, but it will add a new hard inquiry to your account and make your average credit age younger, both of which could lower your score. For those in the credit building stage, adding a new credit card will most likely lower your score in the short term, but also lead to a stronger credit score in the long term. The bottom line: improving your credit score is a good goal to have, especially if you're planning to either apply for a loan to make a major purchase, such as a new car or home, or qualify for one of the best rewards cards available. It can take several weeks, and sometimes several months, to see a noticeable impact on your score when you start taking steps to turn it around. You may even require the aid of one of the best credit repair companies to remove some of those negative marks. But the sooner you begin working to improve your credit, the sooner you will see results.